Welcome, Cathie Wood.
Thank you.
It's your first appearance here at Web Summit.
It is. First Web Summit.
And
been fantastic.
And what a time to hear from you. I mean, okay, the bad news. Markets are falling, startup valuations are dropping, interest rates are rising, and so is the cost of living. So are you still bullish on tech?
I couldn't be more bullish on tech. And the reason is you just laid out a bunch of problems. Innovation solves problems. It becomes more important during these times. And if the globe is in a recession or going into a recession, in the case of many people think in the US, we're going to have that many more problems to solve. And the earnings and revenue growth rate of problem solvers far outshine the economy. So,
do you agree that we're going into a recession, like Jamie Dimon, by so many economists? You do agree?
So I think we're in one. And I think we've been in one since the beginning of the year. In the US, we had 2 down quarters, interrupted by a positive here. But that was imports coming down, inventories, because inventories are too high, so imports are coming down. That's not a great recovery. It's not a recovery. We're in recession.
So already, all the people predicting are still predicting. You're already saying we're already in here. But okay, so that begs the question. Betting on tech, your flagship ETF, your flagship fund, soared 150% in 2020, but it's now down a whopping 75% from its February 2021 high. So given what you just said, that this is a time to invest, let's talk about hedging. Should you have done more of it then? Should we do more of it now?
So Ark does one thing. We don't pretend to be an asset allocator. Our clients are the asset allocators. And our clients decide for their clients how much risk can this client tolerate. So we focus exclusively on disruptive innovation, research, and investing, nothing much. We're not distracted by anything. So it's really up to asset allocators and to individuals also to assess their risk tolerance. The great thing about young people and today is they are cutting their teeth on cryptocurrencies, crypto assets, which are extremely volatile, much like our funds are. They understand if you keep your eye on the prize, you're going to win.
But the question is, how much time is that going to take? And so let's talk about your question about the point about tolerance, because in spite of how tough, how chaotic really these times are, you have come up, you and your team, with a new kind of fund. It's basically a venture fund that doubles down on tech, as you just talked about wanting to do, and is also attempting to offer investments that were once only available to venture capitalists, to Tom, Dick, and Harry, to me, to anybody out here, for a minimum of $500 investment. So this sounds like there is a big catch and also a big responsibility, because you're talking basically to an increasing number of young people.
Yes, well, what's fascinating about young people today is many of them are natively digital, natively interested in technology, and understand that technology does solve problems and make our lives better.
But do they understand the risk?
I think they certainly do after the last year and a half. But even before that, as we were going into COVID, in a 1-month period, we were down 46%. If you look at Ark's entire lifespan, its fund span, roughly 8 years now, you'll see that there have been risk-on, risk-off periods. And our client base, our asset retention has been phenomenal, because our clients know that you average down into periods like this. And they also know and are learning, as they study the various benchmarks and indexes out there, that they don't have the kind of disruptive innovation that our funds do. We are a great diversifier. We think most individuals and institutions are short truly disruptive innovation, and that we can help diversify them.
Now, why are you so sure about this? Based on what?
Based on what? The last 20 years, 22 years, have been characterized increasingly by a shift towards passive investing and benchmark-sensitive investing. Why is that? It is because of the tech and telecom bust, and then again, 08, 09. And many people saw these benchmarks, the passive indexes, doing better than investors who actively manage their portfolios. Well, this was part of a self-fulfilling prophecy. If you have the pendulum swinging towards these benchmarks and towards passive, they probably will outperform. But if we are right, and for the first time in history, we have 5 innovation platforms, 14 technologies, the seeds of which were planted more than 20 years ago, all ready for prime time now, all ready for exponential growth opportunities. What that means is the traditional world order is going to be disrupted. How? These 5 innovation platforms, they are going to impact every sector, every industry, sub-industry company.
This begs again, how do you know? You're saying not benchmarks, so what are you using instead?
So we use our research. The screen for our portfolios is not a backwards-looking index. That would defeat the purpose of investing in the future, right? The screen is our research, and we give it away so that our clients and others can understand why we're investing in these technologies, why we think they're so important, and why they should get on the right side of change. This is part of our mantra. Many people think they are exposed to our kinds of strategies, the disruptive innovation with NASDAQ 100, for example. They are not. If you look into that index, which you find FANGs, NVIDIA, good company, Tesla, we own the last 2, but we have not owned the FANGs for quite some time in our flagship strategy. And if you look down below in the other 50% of that portfolio, you'll find food stocks, you'll find brick and mortar retail, you'll find utilities, you'll find energy.
But that's to make things safer in the long run, to diminish the risk usually.
You know what? If people want innovation, they should invest. Someone should provide them with innovation and not a hedge. Their advisors can hedge, or they themselves can hedge. You can hedge with cash as well.
Are you suggesting that traditional houses that sell these kinds of products are doing less research than you? Are you suggesting that your research is somehow better than theirs? I mean, we know that you have broken the mold in terms of using social media and other platforms to essentially be transparent in a manner that is unknown in the industry. But what makes your research any better than anybody else's, and especially when we talk about these big names that are offering these products?
Well, if you think about innovation that's going to disturb the traditional world order, who are the big banking clients of these banks, right? The traditional world order. They give them a lot of business. And these littler companies, smaller companies, are nipping at their heels, and they're basically dismissing them. And so we are the only company, I think, doing the depth of research on truly disruptive innovation out there. And we are also doing something else that traditional research firms do not do anymore. They used to when I started in the business. We are focused on a 5-year investment time horizon for our public portfolios, and now for our public-private crossover fund, longer still. This is what's missing in this market, this very short-term behavior that has forced management teams into basically catering to short-term desires like buying back shares, paying dividends, instead of investing in innovation. I do believe that during the past 20 years, we have been through the most massive misallocation of capital in history.
Okay, that's a big statement. Okay, defend your argument.
This move towards indexation, what is it? It's investing in the past. The companies at the top of these big benchmarks are there because of past success. If we are right, and there are 5 innovation platforms, which include 14 different technologies, all evolving at the same time, and S-curves are going to be feeding S-curves as they converge, then the traditional world order is going to be, we think, severely disintermediated, if not destroyed.
Okay, if I think long ago, humanity has moved away from people who could tell them the future based on crystal balling, right? Could look at the crystal ball. So you're talking about having some sort of access to understanding the future. So talk to me about what focuses, where you're focused in terms of what you think is going to be transformative. What areas are you really focused on?
Well, first, let's discuss how we get there. We focus on something called Wright's Law. Wright's Law is a relative of Moore's Law. Moore's Law is a function of time. Wright's Law is a function of units. And Wright's Law is working better in the semiconductor industry than Moore's Law is these days. We center our research around understanding how technology learning curves are going to translate into cost declines, and how soon these technologies will become inexpensive enough for broad-based access. So that's what we do, technology by technology. The 5 major platforms right now are, one, we used to call it DNA sequencing, or the genomic revolution. Now we call it multiomics, because we're not just talking about DNA, it's RNA, it's proteins, it's, biology is extremely complex. This is going to, we believe, bring about cures for disease. We're already seeing it with CRISPR gene editing in beta thalassemia, sickle cell disease, ATTR. These are cures. And one of the companies in our portfolios is sure that they will have the answer, meaning cures, for diabetes, which is one of the biggest costs in the healthcare system around the world today. So multiomics, robotics, which we don't think is going to replace jobs as much as increase the productivity of human beings, especially collaborative robots that are covered in sensors. Energy storage, so electric vehicles, artificial intelligence. Artificial intelligence training costs are dropping, according to our estimates, by 60% per year. And the breakthroughs in AI are astonishing even us. We expected, for example, computer programmers to increase their productivity with AI, with something called Copilot now. In 10 years, it happened in 6 months. So again, truly disruptive. And then the last one is blockchain technology, which, if you think about the internet, many people say to me, oh gosh, that's where, we were in the tech and telecom bubble right now. We beg to differ. Blockchain technology basically is providing us what the internet was lacking when we didn't understand that it would involve commerce. And if you look at the cost declines associated with each of these technologies, you look at, and Wright's Law says for every cumulative doubling of units produced, costs decline at a consistent rate for each technology. DNA sequencing, 40%, or if you're talking about long-read sequencing, 28%. Robotics, 50%. Battery technology, 28%. Artificial intelligence, I just mentioned, we're getting our arms around what this is, but AI training costs dropping 60% per year, and these breakthroughs, astonishing breakthroughs.
But with this fund, what you're doing is you're essentially by saying, venture capitalists shouldn't be the only ones making the money on the future. It should be everybody who has $500 or more who wants. But the question is, let me just ask it this way: you're the daughter of immigrants. You were raised Catholic. I know what it's like to feel guilty as a Catholic. This is part of the deal, okay? Whenever you do something wrong. You're speaking to an audience that loves these technologies and is excited about these technologies and really wants to be a part of the future and really wants these new companies to have the time needed to develop. But do you not have a tremendous responsibility to make sure, especially young people with not the money, the same amount of money as a venture capitalist, doesn't lose too much? What is your responsibility, and how are you going to live with yourself? How are you going to live with the guilt if you're wrong?
So again, our research, we believe, is the best in the business. We have 2 very important proofs of concept here. Tesla, we were ridiculed for our forecasts on Tesla. Why did we get that one right? Because we understood where battery technology was in terms of cost declines, hitting tipping points that would increase access. And so Tesla did go up 20-fold. This is so exponential growth is what many people in the traditional world, not this world, but many people in the traditional world are scared to death of exponential growth. Why? Their first exposure to it was in the tech and telecom bubble, and that ended badly. Investors were flocking. That was the time to say, wait a minute, the technologies are not ready and the costs aren't low enough yet. This can't happen. Today we're saying, hey, the technologies are ready, the costs are low enough, and you've got investors not running into these technologies, but running away from them, which, by the way, I've learned from very early in my career. If everybody is looking in this direction and thinks this is the way it's going to work, and you see evidence building, data building, suggesting this is the way it's going to work, you're going to make a heck of a lot of money.
What's the time horizon?
Time horizon,
how long?
This is 5 years.
How long do people have to keep their money in this investment? And by the way, just give me the number, because I need to ask you one more question before we finish. We're running out of time.
Sure. Number. So we believe...
How long do people have to
5 years is our investment time horizon. We believe these technologies are going to scale in the global equity markets from $8 trillion now to $210 trillion by 2030. And if you want to see the building blocks for this, go to Ark Invest. Our big idea is 2022, and you'll see the building blocks for that $210 trillion number.
Meantime, you keep talking about Tesla, which of course makes us think of Elon. And so the question is, do you think that he is qualified to run Twitter, which we know amplifies, accelerates propaganda, misinformation, and also outrage? I mean, how bullish are you on what he's going to do with it, not just as an investor, but as a user?
So we are public now. We did invest as he took it private. We're very excited about he believes in vertical integration. And I think he's thinking about a super app like WeChat Pay. Remember, he started in the payments industry, PayPal. He sold his company to PayPal. He and Jack Dorsey working together, I think, could turn this into a super app. And
super app in terms of money making, but is it the super app?
No. I mean like a digital wallet. So you do all your banking there. Maybe there's something they're doing with Cash App. You do all your shopping there. You get your loans there. It's your bank branch in a pocket. I think they have a good shot. And one of the reasons, as I've watched Elon, he truly believes in vertical integration. That would be a magnificent vertical integration. And remember, he already has designed and is manufacturing the ultimate mobile device, the internet on wheels. It's called Tesla cars. He knows how to do this. He knows how to do this.
But does he understand how to do social media? Does he understand how to do outrage and deal with the reality? People are quite concerned as users about a kind of darkness seeping into Twitter that is there, but maybe not in the amount that it will be based on what he's been saying.
Yeah,
what are your thoughts about that as a user?
I think the darkness was in their opacity, Twitter's past. Like, we didn't see the algorithms and how they were working and what they were.
So you think it's going to make it more transparent?
Of open source, transparent. This generation, we know this. We built Ark on top of transparency and true democratization. They want the transparency.
Okay, the lights are flashing. I can't ask any more questions. Thank you so much for your